All right, 0.2% for the Eurozone as a whole. Inflation still at 0.4. Well, that was the expectation. It's low. What do you think Draghi feels about this?
Well, I think there is the ECB are definitely going to have to do some more action, and we're going to see a big divergence of the central banks over the coming month. So the Eurozone has some real structural problems, and the one shining light, Germany, seems to be stuttering at the moment. So I think we're going to want, Draghi's certainly going to want a weaker euro and try and get some form of inflation. I mean, there really is a risk of a lost decade like Japan here, but Germany does seem to be stuttering.
How much of the slowdown is due to sanctions against Russia biting back on Europe, do you think?
Yeah, I think there's certainly an element of that, and Germany is suffering because of that. Russia's an important trading partner, and it doesn't look like there's going to be any quick end to the Russian problems. Perversely, oil getting hit and being very low might actually cause the Russians some serious issues, and they might decide to step away from Ukraine to make up for that. So I think Russia's ongoing, and Germany is going to carry on stuttering.
I know you're being very selective on the equity side. You like Germany, I believe. You like the UK. When are we going to push through 7,000 on the FTSE?
I think probably before the year end. I think the markets are going to have the typical Santa Claus rally that we see, and I think there's going to be new highs again on the S&P. So I think the rest of the Eurozone, France, I think, has got problems, and I would be region-specific and probably very stock-specific as well within that sector-specific.
And what about the US?
The US, I think, is strong. I think the weaker figures in Europe actually are probably music to Mrs. Yellen's ears. It means that they're going to have less pressure to raise interest rates because of a global slowdown, in essence. And I think US interest rates will probably stay unchanged for pretty much the whole of next year, maybe even into 2016.